This one stock will surprise everyone. The ticker is FSOR, First Solar, and they have a partnership with BP. So BP contracted 5 gigawatts of solar panels from them. BP was the oil company, and now they're rebranding into the renewable energy fuels company of the future with the help of First Solar. First Solar had an awesome Q3 earnings, beat earnings per share. The guidance is a little murky, but the reaction looks awesome. So that's the buying opportunity. This isn't financial advice, but let's jump into the chart.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so here is the First Solar net sales, a little under $1 billion. This is the revised down guidance from the prior year. So despite all that, despite shipping fewer panels, they had to do a little bit of a warranty, $50 million, seems like a one-time deal. Yeah, they're profitable. So that's a big deal for sure. And if they're able to do all that, be profitable and still have that lower revenue, lower guidance, all that, and the guidance isn't impacting the earnings reaction. So that's what's interesting. So did it take a second? Yeah, it did. Sometimes you see these move up in the after hours, but a lot of buying. So people are definitely interested. And by people, I mean not retail. So you can sort of ride this wave. It's at an interesting level on a 5-year chart. We're getting up near these highs. So we'll see what happens. But once you reach above here, you're really looking at sort of all-time highs. This is from 2008. I mean, that was a long time ago. So solar's been a long time coming. This is a little difficult to get positioned in when a stock just marches up, but it also means that, the earnings are solid and there's buying activity that's someone is accumulating this stock. So you can't really, maybe you could say that this was like a flag opportunity somewhere in here, but it was a little weird because this earnings reaction didn't do anything. So this was less, not predictable. Maybe there's a flag opportunity here, but that's about it. You can't just buy, in my opinion, like just randomly in here and just expect it to keep going up. Whereas right now, you get a clear level, this closed here, so 267. You can buy a little above that, risk a few bucks, and then look for a move up to, 300 whole dollar level would be totally awesome. Somewhere up in here. So that's the chart. And then as for what's going on first in the ETF, the TAN ETF is the solar ETF, has been looking great. Enphase, another solar company that not so hot, but Sunrun has been looking interesting. A little difficult to get positioned in this either. Maybe you can kind of see something shaping up, but earnings are coming up. You kind of have to wait for that unless you think this is going to shoot up. And it seems like this is definitely the best opportunity, First Solar right here. So yeah, it's a high volume. There's high volume. Close, there's the close, 266. Setup, that's the setup. Buy over that. So that's how that works. When it works, it doesn't always work, right? But it's a low risk opportunity. So you get more shots on goal with that. Now, as far as what actually happened, what they're actually up to, we were talking about what happened with their earnings. Here are the connections. Here's that contract with BP. It's a big deal. 5 gigawatts is a lot. I'd love to put that in dollar terms for you. I could, but essentially I would be guessing. And we know gigawatts is the same order of magnitude, as we talk about power for data centers, it's on the order of gigawatts, not, megawatts or dozens or hundreds of megawatts. It's gigawatts. So this is the target, 25 gigawatts of solar by 2025. And that's the global target for BP. So First Solar, BP is huge. I mean, First Solar providing a fifth of that, 5 gigawatts, is a big deal. I'd love to tell you exactly how much does 5 gigawatts of solar panels cost, but I'm pretty sure, it's probably in the hundreds of millions, considering the revenue is like 800 million. As far as other companies that this company is connected to, a rough estimate, let's see. We have residential solar panels at our house, but I feel like this is a whole different ballgame. 5 billion in capital cost. All right. Well, I don't know if we're gonna trust Dr. ChatGPT here, but it definitely seems like it's in the hundreds of millions at least, which is sensible given 20 gigawatts or something is the AI data center requirement. So, all right. As far as First Solar connections to other companies, I mean, these revenue numbers are awesome. I don't know exactly if dilution matters for this company. I think it's just too big, which is good as well. You don't want to have to worry about. I mean, Sunrun has been on some crazy sort of moves. I mean, this is Sunoco. Sunrun, this is pretty ugly. This move down, it got cut in almost more than half. I mean, 20 to 10. And I'm not saying that, this is better in that sense, but at least, it's shaping up in a way where this is just sort of erratic. And it's a lower price stock too, and it's just more liquid. It's just $200 million a day. Still has earnings coming up. This is more like double that, $500 million a day. It's just important to get in the liquid one. And I mentioned that because so many times it's attractive to get in the lower price one because it seems like it's inexpensive, and you're getting in and it'll have more of an opportunity upside, but it also has more dilution. See, First Solar doesn't even show up on this dilution tracker. No pun intended. This isn't about solar tracking. But if you look at some of these other companies in the solar space, I think you're probably going to see some, they need to raise money. I guess Sunrun is just over $1 billion market cap. It's not in that category. Enphase maybe is out of that category as well. But you do have to be careful with these. This is 4 billion versus First Solar is up in, let's see. Yeah, 20 billion, 100% institutional owned too. That's an important metric. If you can see that or remember to look at that. I'm not saying you have to actually dive into all of these filings that are just pulled from the public, Edgar, the public database of all filings. But it never hurts to sort of have some sort of tool that summarizes for you essentially how many institutions own this. If you're shorting a stock, you definitely do not want to short a stock that's 100% owned by institutions. So for us, buying a stock, that's pretty attractive to see that. It feels safe. This institutional ownership is pretty high too. I don't know if that's the case for all of these. Let's see. Enphase. Yeah, a little lower here. So you can be a little bit less, gung-ho buying a company with less than 100% institutional ownership. It's just one more little piece of data that can sometimes help. As far as other information about this company that you have to be careful about, we'll see if it's kind of the whole energy narrative, right? if solar becomes less attractive, so we got to get to nuclear to power all these data centers. We know that. That's going to take 5 to 10 years. So we need natural gas in the meantime, and then solar can fill that gap. And as long as, the big tech lords are excited about solar and wind, which they seem to be, but it's not a silver bullet, right? In the words of the renewable energy lab when I worked there, that's what my boss would always say. It's like you need all these sources because they're so intermittent. So the wind blows at night, the solar shines during the day. And then, you need natural gas because that's sort of, honestly, probably the best source until we get to nuclear. So that's the chart. That's a little bit about the company and little institutional ownership, sort of validation for why this is worth owning. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to chat in the Discord and get the best idea of the day, on the day, head over to stockscommunity.com. You can join that, try that out for $25.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.